You're watching the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordis. Thanks for joining us at XM.com. Trade fears continue to wreak havoc in global markets, with risk aversion making a sharp comeback on Friday after Washington and Beijing exchanged another round of retaliatory tariffs, escalating the trade war to a whole new level. China responded to the previously announced U.S. tariffs by introducing tariffs of its own on $75 billion of American goods. The retaliation infuriated the U.S. president, who hit back immediately on Twitter by ordering American companies to immediately start looking for an alternative to China. Trump didn't stop there, though. A few hours later, he upped the stakes again by declaring that the U.S. will raise its tariffs on all Chinese products by another 5%. Markets reacted violently, with U.S. stocks falling by around 2.5% and gold reaching a fresh 6-year high earlier today. In the FX universe, the yen briefly soared to a new 3-year peak against the dollar, with the greenback taking a heavy hit as the escalation raised the odds for aggressive Fed easing. Yet the situation has calmed down a little on Monday. Safe havens are giving back some of their gains and stocks are recovering ground after Trump said that China called the U.S. negotiators yesterday and wants to come back to the negotiating table. That headline lifted sentiment, even though Beijing denied making the call a few minutes later. Admittedly, even if such a call took place, it's not a game changer. Actions speak louder than words in this high-stakes poker game between the world's two largest economies, and in this sense, the latest explosion in tensions allows very little scope for any real compromises without one side losing face. In fact, further escalation seems very likely, as China is almost certain to retaliate against Trump's latest tariffs. Hence, waves of risk aversion may become an even more frequent phenomenon, keeping haven assets like the yen in high demand. As for today, U.S. durable goods orders for July will be in focus, and any signs that firms are putting their investment plans on ice until the trade uncertainty dissipates could make investors even more confident that the Fed will act with force to sustain the expansion. This was today's Daily Market Comment. Thanks for watching at XM.com.